and they're selling oil, which is a cyclical asset. So the markets are anticipating a big slowdown. Now, if energy costs go down, that helps the miners, other thing being equal. And if the government starts cutting interest rates, that helps the price of gold and silver.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. It's 11/7/23. John Rubino is with us now. Hey, man, John, the debt situation, it looks like we've gotten to the point where too much of a good thing or too much of a bad thing has become a really bad thing, right?
Hey, Kerry. Yeah, well, it could be that interest rates finally peaked this last week because, there's lots of stuff. I'll go through some of the bad things that are happening to the economy that make it look like it's a slowdown. Plus, we got, a second potential world war out there. So I think the Fed paused at their meeting and they said some relatively dovish things. I think a big part of it is that they don't want to be tightening into a global military crisis. So they want us to have the liquidity that we need to fight two different wars. So that's a big part of the rationale. And the other part is that, under the surface, we've been talking for so long about how high interest rates have to go before they start breaking things. Well, there are things that are breaking. They're not the headline numbers, like they're not GDP yet or unemployment or anything. But, the GDP now reading from the Atlanta Fed for the current quarter instead of the previous quarter is like 1% growth. Mm-hmm. So growth is slowing down dramatically. Credit card debt is soaring and personal interest expense. I didn't even know that was a stat that the Fed kept.
Yeah, I didn't either.
But it spiked and it's up above $1 trillion from a considerably lower level just recently. But, the interest that consumers are paying is way up now, which means consumer spending has to suffer because of that. And student loan payments just kicked in, and let's see, credit card delinquencies are spiking. Home purchase mortgage applications are down to 1994 levels. We had like 2/3 of the number of people in the country in 1994 that we have now. And yet the mortgages being taken out to buy houses today are only at that level from back then. And WeWork, I didn't know they didn't go bankrupt. I thought WeWork was already a bankrupt company, but apparently not. They just declared bankruptcy. And that's a big commercial real estate manager. So they had 20 million square feet of all of this.
Scam.
Yeah.
The whole thing was a scam, wasn't it? Do I have that right?
They tried to pretend that they were a tech company when they were really just a real estate management company. So they got a tech
and a bad one
valuation. Yeah. And so what it was they were, next generation office space. Anybody can come in and just sign up for a desk, yada, yada, which is just silly. But anyhow, they're bankrupt. And what happens to all the real estate leases that they've taken out on that 20 million square feet? And they're already basically just defaulting on a lot of leases. A big chunk of them are in New York City, by the way. Yeah, so that's another hit to a sector that was already in trouble. Commercial real estate, especially offices, bad news lately. And so now it's just going to be that much worse. There's other stuff, but that right there is enough to make you wonder if next year is going to be a deeply recessionary year.
Yeah.
And so add in, extremely high interest rates that are hitting everything in sight and the potential for two wars that the U.S. could get sucked into here still. I think it's time for interest rates to roll over, started heading back down, and for the Fed to start easing again. I don't think that happens right away because inflation, at least headline inflation, is still above target. Mm. But I think things are bad enough that it won't be long before the Fed is forced to reintroduce panic QE, when they're just buying every bond in sight. So that's a
And
2024 story, but yeah, it is inevitable.
So, we're always repeating that Great Gatsby line. How did you go bankrupt? Slowly at first and then quickly. Listen to these highlights from total debt that the Federal Reserve just released today, the debt report. Total household debt skyrocketed to $17.29 trillion. Mortgage debt, even though it's low, climbed by $126 billion to $12.4 trillion. Credit card debt jumped $48 billion, which is a 4.7 quarterly increase. Student loan debt grew by $30 billion and is now at $1.6 trillion. And auto loan debt is now at $1.6 trillion. So there's as much student loan debt as there is auto loan debt. So it makes you think those students would have been better off buying cars and driving for Uber, right?
I think 50% of college students, yes, they would have been better off going straight to work. There's a South Park episode now where one of the subplots is that in South Park, Colorado, in the town that the cartoon takes place in, all the handymen are getting rich because all the upper class people got all these college degrees that are completely useless. And they don't know how to fix anything. Yeah, so the handymen are the new 1% in that town. And you know what? I think, if you had an 18-year-old kid right now and you had a choice of sending them to a liberal arts school or to a plumbing, a plumber's office where they become like a journeyman plumber or something like that, choose the plumber. It's their life will be so much better. Yeah.
I got our next business, John. We're going to start Handyman Academy, where we're going to train people to be handyman, because basically a handyman's kind of like a journeyman. He could do a little bit of a bunch of different things. He's basically an expert in many areas, but a master of none. And, whether it's painting, little plumbing, little carpentry, they can do it all. So we start the handyman economy because there's a shortage of them. I'll tell you, here in Florida, you get a good handyman and you want to adopt the person and make them part of your family. My handyman got deported and my life has never been the same.
See, that's the kind of illegal immigrant we want, right? Somebody is, with all the handymen out there in the world who are yet American citizens, they should just come here. Those are the people we should let in. That actually is okay. Two things. One is you should totally start that school. That would be if you had a degree from Handyman U
certification. Yeah.
Because one thing you don't know how to trust a new handyman.
Right.
They know what they're doing or anything. But if you got a degree in being a handyman, then that gives them $10 extra an hour probably. So I have a kid who works for something called what the heck is that called? TaskRabbit.
Yeah. Oh, right. Yeah, I've heard of that. Yeah.
It's like Uber for handymen. And and he says he makes $40 an hour putting together IKEA desks and things like that because people don't know how to do that. And so he's actually kind of liking it. It's varied and it's challenging and it's the hours are basically his to choose, and he feels like he's making pretty good money. So yes, and I'm much happier with him doing that than I would be with him in year 3 at Oberlin or someplace.
Yes,
where he's a radical artist. Yeah,
in puppetry, right?
Yeah.
Pursuing his degree in puppetry.
Yeah. So anyhow, that's an interesting trend. Yeah, it's an interesting new thing that's happening.
Nobody knows how to fix anything anymore, John. This is what society's devolved into. All these advanced degrees. I was fortunate. My father was a builder and was an ace mechanic, so I was fixing stuff from the time I was a little kid. But even still, there's certain things I don't like to fix. Like I don't like to fix grout in tiles because you're on your knees and you're bending over. And I tried fixing a toilet the other day and the hose disconnected and I had 2 inches of water on the floor, I would have gladly just paid a handyman $100 to just take care of it for me. And then when your toilet leaks, you don't want to call in a plumber because it's a little too extreme, but a handyman who's trained by Kerry and John's Handyman Academy, I mean, that's a guy you can trust.
You should totally found that school. You know, you would take that thing public 5 years after founding, and you'd be a billionaire.
I think we can do this, man. I think this is a business model that'll work because nobody can fix anything, especially here in Florida. They're all old. So even if they used to know how to fix stuff, they've probably forgotten. The younger people never knew how to fix anything anyway. And the people in the middle just can't be bothered, right?
Well, what's the generation that comes after the millennials? Is that Gen Y or
the
Zoomers? Okay.
The
Can you imagine what it's going to be like when the Zoomers are the homeowners? You know, these kids who've played video games their entire lives, never really even interacted with other people face to face, but definitely never fixed a leaky toilet or anything. It's just going to be this booming market for, yeah. Oh yeah. Yeah, forget it. You know, they will, they'll happily hire somebody and pay them $100 to do stuff like that. Actually, I got to say, I'm not handy. I'm one of those guys. And we had a handyman back in Idaho where we lived before. And I literally offered him to come live in our spare room. I was only partially kidding. You know, I said, Gustav, if you want to live here, you know, we have a bedroom. You can just move in, because you know, we would get like a leak, and I would think, oh my God, it's in the walls. We're going to get mold, and I'd freak out. You know, and the plumber and the handyman would come, and they would say, oh yeah, we just need to put this little knob right here, and that's fixed. You know, and so yeah, those guys were incredibly important parts of our lives back then.
Yeah. Hey, you got to have a good handyman, and they're becoming harder and harder to find. And that also fits in with, probably, if you're going to hire a handyman, you're going to need to learn a foreign language, right? Because he's probably not going to be from the United States. So, you know, wherever he might come from, you're going to have to, if you want to communicate, well, I guess you could use Google Translate, right?
Well, no, your handyman college is going to have English as a second language department, where you just drill them, and you know how do you say faucet, and how do you say Phillips head screwdriver, and stuff like that. You know.
Yeah. I think all right. So you need a little language arts in there, or at least you got to teach them to use Google Translate.
Well, see, and then, you know, if you're teaching them English, you get government money for that. The government will subsidize your English language programs for immigrants. Right. So there's your second income stream.
I love it.
Then you do, you know, the way a lot of coding boot camps do is they don't charge you anything to do the boot camp, but you owe them 1/3 of your salary for the next 5 years or something like that.
A little totally do servitude while we're at it.
Yeah. You know, you could totally do that with your handyman students.
Oh, I love it. All right, we're on to something here, man. Mm-hmm. Like, we just need to franchise out our brains so we don't have to do anything, right? But there's, like, you know, there's really a need for these people, and we haven't been doing anything to make sure that they actually, you know, it's like nurses. I mean, all these different jobs we just can't keep up with. And you would think in a market economy we supposedly used to have, the market would be producing these people, right?
Yeah, that's the weird thing. Things aren't being balanced by the market like they used to be. Do you know what a traveling nurse is? Have you heard of it?
Yeah, I do know about that.
That's the weirdest thing. There are these nurses that travel around, and they take like 6-month contract gigs, but for crazy money. I met one who makes $5,000 a week.
In a cent.
Yeah.
Is that
right? $5,000 a week, did you?
$5,000 a week.
Oh my God.
Yeah, and it's a 6-month contract. He does that, and then he moves on to another place, and he gets to live in, and it's a guy, and get this, his name is Possum. Yeah, he's a country boy. He looks like a Texas biker, but he's an ICU nurse, and they're in such shortage that he can just choose where he wants to live for 6 months. and make like investment banker money while he's doing it. Yeah, it's crazy that exists. You'd think that a market like that would be flooded with people wanting that job, but apparently not.
Yeah, like what happened? I mean, we're getting all these nurses from the Philippines. Did they run out of them? I mean, seriously, we had a program in the United States recruiting Filipino nurses and healthcare people to come to the United States, but I guess that's over.
Well, see, the broader issue, and this takes us into immigration policy, where we should definitely have immigration, but we should be picking and choosing the people that come, right? Not just everybody who walks across the border. It should be, okay, do you got any English language skills to begin with? Do you have any technical skills that we need? Can you program a computer? Are you an ICU nurse? Come on in, And if we did that, we would upgrade our society really dramatically by, causing a brain drain in the rest of the world. But that's how we should be doing it. And we're doing everything wrong, Kerry. No matter what we talk about, it's what we're doing wrong in the United States. We are a dumb country now.
And we've been dumbed down, but from top to bottom, but like our leaders, who isn't dumbed down?
A market-based economy is supposed to correct for stupidity.
Mm-hmm.
And it's not happening here. That's what's really weird about this, because, you would think that everything would be optimized by people making their own choices and drawing in the talent that they need to run their industry perfectly and everything. And it's not happening. So I can't explain it. I guess that's a subject for either a long video show for you or a long Substack for me.
I want to know, why we aren't producing the people that we need. We're importing engineers, from all over the world, India, China, you name it. We can't seem to produce anybody. Doctors, no longer homegrown. They're coming from all over. What are we producing here? We're producing, guys, I guess we're still producing programmers and AI engineers, right? Programmers, that type of thing, but we seem to have lost our ability to produce the people we need to run this complicated economy.
Yeah, but see, that's what immigration ideally would fix, right? That's the kind of the safety valve. When you've got some big gap in your economy, you just look around the world and invite in the people who fix your problem. We don't do that, though. See, we could, with immigration, fix all these things we're talking about that are wrong. We'd get handymen from all over the world if we need them. We could get 1 million plumbers to move here this week if we just advertised it correctly, right? They come from Dagestan and from Honduras. It doesn't matter. If you're a plumber, you come. And we could do that, but we're not. We're I don't know. Maybe Vivek Ramaswamy will come up with that idea and actually fix it if he's ever president. But or maybe RFK, those are the kinds of guys who seem to be thinking at least about stuff. And maybe they'll come up with an idea that you, instead of just closing the border, you use immigration as a way to upgrade. And it doesn't sound like rocket science.
That's what we used to do, I think. But, it's, I don't get it. But hey, on to important matters or other important matters. So we've already talked about the 10-year has peaked. It appears, it was up, I think you mentioned, to 5%. Now it's down to 4.6. What does that tell you about the economy if the rates are going down and the bond vigilantes are throwing in the towel?
Well, I think 5% is a big round number. And you would expect, just technically, a lot of selling to be right there, because people like to put their buy and sell orders at round numbers. So 5% is now resistance. Okay, it's a ceiling for interest rates. And if the 10-year yield spikes above it, then maybe it becomes the floor. So we don't know for sure that interest rates have peaked, but they do feel like they have, and it's legit. Yeah. There's a legitimate reason to think that they should peak here, because 5% was higher than the terminal rate in 2007, back when we only had half as much debt as we have now, So you think we're financially more fragile today, which means the terminal interest rate, the rate that starts breaking things, would be lower. And, it could be that we're going to look back on this and say, oh, we overshot when we got to 5%. We should have started cutting it more or whatever. But we'll see. there's just an awful lot of stuff going wrong out there. I'm worried about the small banks. With commercial real estate tanking, a lot of local and regional banks own that debt, and so that story has yet to play out, and that's a scary thing.
Oh, it's really scary. And $1 trillion a year is our interest expense, or it's going to be, for the U.S. debt. So you know that they're going to monetize a chunk of this debt. Even if they monetize the interest payment itself, that's still $1 trillion of printing out of thin air just to keep this whole thing afloat. How long can they keep doing that for, John?
Yeah, you see, there's this big debate about why the Fed is still running massive deficits with the economy growing. And, the last GDP report was 4.5% annual rate. So why is the deficit so massive? And the answer is pretty straightforward. Suddenly, we have $1 trillion a year in interest expense, whereas before it was $300 billion or whatever. So we have this $500 to $700 billion extra bill that there's really nothing we can do about.
Print it.
Well, you know what else is interesting about this is that the federal government, with that big deficit that they're running, they started borrowing very short just lately. So it was like they knew interest rates had peaked and they were going to go back down. It could be that there's some collusion going on there, where the Treasury Department told the Fed, you need to start cutting interest rates, and for the next couple of months we're going to anticipate that by borrowing 3 months out. All right, and by that time, those 3-month things. By the time they come due, we want to be able to roll them over at a lower rate, and so we'll see. But it sounds like something like that happened.
Yeah, well, it's definitely intractable. There's nothing they can really do other than print up another trillion, buy $1 trillion worth of treasuries every year. But something like 70% of the national debt is actually interest on the debt that has been rolled over. At least that was what it was a few years ago. It's probably even higher now. So basically the whole scheme of, printing up some money and then issuing a note. So the Treasury issues a note to the Federal Reserve. It then prints money out of thin air and gives it to them. And then it collects interest. It sells that debt off, and the banks are printing up money to buy it. And then, 70%. So if we just got rid of 70% of the debt, that would be the interest that's accrued on the debt that we just rolled over, This is a mess. It's a mess.
We're kind of doing modern monetary theory already.
Yeah, we have that. But why are the gold miners so cheap when all this is happening?
That is an interesting question, because they are ridiculously cheap right now. If you look at, for instance, GDX, the big gold mining ETF, versus, say, the NASDAQ or something like that. The NASDAQ went up mostly in the past year. GDX went down, and then there's like a 25 percentage point gap between their performance. GDX is barely up for the year, and the NASDAQ is up, 20% or so. Why is that? Who knows? I think one part of that is that mining became a very hard business in the last couple of years. Oil prices went up and labor costs went up, and those are the two main inputs in a mine, or two main costs of running a mine. So mining margins were squeezed by that. But now oil is down. It's in the 70s again from the low 90s.
Really?
Not too long ago. Yeah,
So down into the 70s today? I didn't even know this.
Yeah, last I saw it was like $78 a barrel or something. So it's getting whacked.
$7.44 according to KitGo.
Okay, so this is inflation anticipation, or recession anticipation behavior, right? We're seeing people buy long bonds and they're selling oil, which is a cyclical asset. So the markets are anticipating a big slowdown. Now, if energy costs go down, that helps the miners, other thing being equal. And if the government starts cutting interest rates, that helps the price of gold and silver.
Yeah.
So miners are looking, really cheap at these levels. And even the royalty streaming companies, which are normally the closest thing to risk-free in that space, have just gotten whacked lately. So yeah, I think it's possible that we're nearing a bottom, a cyclical bottom for the gold and silver miners. And I
think so.
If the Fed is back to easing,
unless they go up unless the industry just ceases to exist, it can't get any cheaper than it is.
Well, there's a lot of political risk out there all of a sudden. The thing happened with Franco-Nevada this past week, where their biggest royalty streaming deal is with this gigantic copper gold mine in Panama that was going to send a torrent of cash to Franco-Nevada over the next 20 or 30 years. But people started protesting that mine because of its environmental impact, which is, a real thing. And the government in Panama just threw up its hands and said, okay, on December 17th, we're going to have a referendum. And if people vote to close the mine, so be it. We close this mine. And so that's a big hit to Franco-Nevada. Its stock went down probably more than the hit that it's going to take if that mine closes. So it actually became a better buy at its current price than it was before this bad news. But this means that political risk is an even bigger deal for the commodities space than it was before. We had a revolution in an African country that was a big uranium producer.
Right.
And we got this thing in Panama, and there was one more, I forget. But Chile, which used to be a rock-solid capitalist free market Latin American country,
once upon a time,
is kind of talking about nationalizing some of its lithium mines and things like, that they're thinking of doing things that would be very bad for mining as a concept. As a capitalist enterprise. So what that means is, one, mining is suddenly a riskier business than we thought. And two, North American assets should be trading at a bigger premium than previously, because it's less likely that Canada and Mexico and the U.S. are going to start nationalizing mines. It's no guarantee. I think Biden would do that if he had the choice, and Trudeau would too.
Look what he did to Trilogy. Basically put that company out of business almost with, they'd gotten the permit to build this road in the Arctic in Alaska, and then he revoked the approval, and then they just filed a bunch of metal objections, and this is like tundra wilderness, and it's a road that, is essential to come up with all these battery metals. There's cobalt, there's copper, all the things in the IRA Act, and they've defeated one of the largest potential copper producers in the world, and on questionable environmental grounds. So mining is not safe anywhere, John, is what it comes down to.
Yeah, and okay, here's what that means from an investment thesis standpoint. One is that you want to lighten up on the actual miners, and increase your exposure to the royalty streaming companies, which are really diversified. So they can be hurt by one mine having trouble, but they can't be killed. And then the third thing you want to do is emphasize physical commodity ETFs.
Yeah, like Sprott uranium, right?
Yes. For instance, they just go out and they buy uranium and they take it off the market and they hold on to it. So it doesn't matter what happens to that African uranium mine or anything. And it's good for the physical ETFs if there's stuff like that out there, because it makes the price of the commodity go up, which makes the holdings of the physical ETF become more valuable.
Mm-hmm.
So I think that might be the play in the commodity space right now. Just load up on those physical ETFs and just let the market play out then, and so
eventually the government will go to Sprott and say, we need your uranium, here's a check.
Yeah, see, that's the big risk, is that they expropriate what's in the vaults of the physical ETFs, and then we can't control that. But that's a little further down the road than mining nationalization.
Oh yeah,
but you're right, nothing is safe. The only thing that you want to store things in vaults in other countries just to spread your risk around, and you want to own physical stuff yourself, because
going back to our initial thesis, if you invest in human capital, meaning you learn how to fix stuff, because you won't be able to buy as much new stuff. We've already seen that from the pandemic, So more stuff is going to have to be fixed. And we have less people who know how to fix it than ever before. So there's the play. Invest in the Handyman Academy, right? Get your handyman certification and put your excess profits into physical metals and ETFs.
Yeah, that's That's probably going to end up being the portfolio that we look back on as the big winner, right? You invest in yourself, train yourself to be a handyman. You invest in whoever else trains the handyman, and then you get physical with your investments, and that's probably the thing that works. I'm kind of convincing myself now.
I got the name too for the Handyman Academy. Remember Three's Company? That guy Schneider in Three's Company. He was a goofball. We call it Schneider's Handyman Academy.
Okay, I remember the hot blonde in Three's Company. I do not remember a handyman.
Or maybe, I think it was with the one with Suzanne Summers. And
that's all I remember.
Maybe I'm the wrong show, but hey, that's what memory does. All right, well, that is it for this week. Make sure you go over to John's Substack, rubino.substack.com. Sign up, subscribe to his newsletter, because you will be learning about handymen and the acute shortage we're having. I have a feeling there'll be an article coming out shortly. Hey, sign up for a free newsletter, financialsurvivalnetwork.com. John, we will talk to you in a couple weeks.
All right, Kerry. See ya.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.